Over the last few years, the crypto market has been declared dead so many times that it's basically become a meme by now. But every single time, literally every time, it happened right before the next major move up. So why could 2026 be the next year when crypto surprises all of us again? Why? And I'm not gonna push emotions here or promise the glorious moonshot gains. Instead, just look at the logic, the market cycles, and how big money actually moves. I'm gonna show you 5 reasons, and each one of them on its own could really turn the market around. But together they could create the kind of conditions for growth that most people still aren't expecting. Reason number 1. Institutional money comes in slowly, and that's exactly what can stretch the market growth over the time. And here's the thing, big players don't buy on emotions. Funds, banks, corporations, these are not Telegram traders. They take months to approve the decisions, enter the market in parts, and spread their buying over the years. Just think about it. After Bitcoin ETF launch, there was no one-day explosion, and that's exactly the most interesting part. The money didn't come in all at once. It flows in gradually, month after the month, and it's gonna keep coming in the same way. Now, this is important to understand. ETFs are not one-time event. They are basically a consistent demand channel now, working every day like a pipeline that no one plans to shut off. And honestly, this is just the beginning. You've got pension funds, insurance companies, family offices, all starting to step in. And none of them are thinking about tomorrow or next week. They are looking 5-10 years ahead. So what's the takeaway here? Institutional money doesn't create one sharp spike. It creates a long wave of demand that can support the market for years, including 2026. Reason number 2, money is losing value, and crypto remains a real alternative to the system. The main reason Bitcoin even exists is currency devaluation. And here we need to be clear on the terms. Devaluation means that money is losing their value. Sounds like inflation, right? Kind of, but not exactly. Inflation is when prices go up inside a country. In simple terms, your money buys less. A basic example, for example, bread used to cost 1, now it costs 2. Your salary is the same, but life is more expensive. But the devaluation is different. That's when a currency loses value against other currencies. So your money gets weaker relative to the dollar or euro. For example, $1 was like 70, now it's like 100. And as a result, imports, tech, everything becomes more expensive. So let's make it simple. Inflation is rising prices, devaluation is weakening currency. Now with that in mind, look at what's happening globally. Rising debt, constant stimulus, money printing every time there is a crisis, and inflation that's often just masked in reports. Yeah, rates may be high right now, but the system can't survive without cheap money. It's just built on it. And once the rates start coming down again and liquidity flows back into the market, capital will start looking for protection against devaluation, for alternative to the traditional system, for asset with a limited supply. And that's where crypto stops being just a trend and becomes a logical choice. Now, if you actually want to understand how to navigate all of this and not to miss the opportunity to make money, you need to understand how the market really works and how to actually act on it. So check out our Telegram channel. That's where we break down the market, give clear analysis, share trades you can actually follow, and show how we actually operate in the real time. Access is open and free for now, so you can go in and see how everything works from the inside. Reason number 3, the tech side of crypto is finally becoming usable, and that changes the game. A few years ago, let's be honest, crypto wasn't convenient. It was slow, it was expensive, complicated, and hard to understand. But over the last few years, a lot has changed. Now we've got L2 solutions, faster blockchains, cheap transactions, real growth in DeFi, tokenization of real-world assets, and the key point is crypto is no longer used just for speculation. It's being used for payments, storage, transfers, financial operations without intermediaries. And here is something important to understand. The market always prices in technology with a delay. So what's the takeaway? By 2026, crypto is no longer seen as an experiment. It's seen as an infrastructure, and that completely changes how capital looks at it. So reason number 4, the crypto market moves in cycles and 2026 fits perfectly into the next phase. The market isn't random, it moves in cycles with a clear growth phases. For example, 2013 growth, 2017 growth, 2021 growth, then correction, and then recover. And every time the key trigger was the halving. The last halving was in 2024. If you look at previous cycles, for example, 2024, adaptation, 2025, acceleration, and 2026, continuation of the trend or even a second wave of the growth. Now, here's the important part. The market doesn't reverse in just one day, especially when big players are involved. They move slowly, step by step. So the takeaway is very simple. From a cycle perspective, 2026 is not late. It's a logical continuation of the move. And in every phase of the market, there are opportunities to make money right now. And these are exactly the setups we regularly break down in our channel. Reason number 5, mass psychology. Most people are still out of the market, and that's exactly what creates upside potential. The strongest moves don't start when everyone is confident. They start when most people still doubt. Right now, a lot of people stepped out after the drop. Some got disappointed, some are waiting for the perfect entry, some think it's still too early. But the market grows when people don't really believe in it, and 2026 could be exactly that phase. So look, confidence is only starting to come back. Capital is flowing in slowly, and there is no any euphoria, which means the real upside is still ahead. Now here's the most important part. Right now is the best time to learn. While the market still gives you a space to enter calmly, figure things out, build experience and actually understand how it works. Because when the market really starts moving, most people will jump in at the highs again, with no any experience, acting on emotions driven by FOMO. And that's when money gets lost. So if you want to clearly understand what phase the market is in, when to enter, when to exit, and stop trading based on emotions, just follow our channel. See you there.